Yeah, good morning, ladies and gentlemen. The last is the best, as you all know. So, at least for the FinTech space, the FinTech section here. My name is Nikolaus. I'm co-founder of Myos. Myos is fueling the new retail revolution, and I'm going to spend the next 5.5 minutes to tell you all about it. We all love numbers, so let's start with a big one. $25 trillion US. That's the market we're moving in here. The market is the global retail market. And that's not only a really huge market, it's also growing to 28 trillion within the next 3 years. Now let's break this market down a bit. If we look at the percentage of goods sold online, almost every fifth product in the world will be sold online within the next few years. Even more astonishing is that over 2/3 of those products will be sold via marketplaces. You all know them: Alibaba, Amazon, eBay, and so on. Now, if you ask one of those merchants on the marketplaces, what's their biggest concern? 8 out of 10 will tell you, working capital. I need money in order to buy my goods, in order to grow my business, in order to do marketing, and so on. So there's a huge opportunity here. Let's look at the supply side. We all know banks like to take a one-size-fits-all approach, so they typically have a limited understanding of a single sector, of a single industry. Same goes for their risk model. Pretty inadequate for nowadays fast-paced online merchant business. And you know the customer experience, it takes a while, we're very paper-based and so on. So we see here a unique market opportunity. How do we tackle this opportunity? Basically, we don't have to reinvent the wheel there. We just have to take best practices from other industries. First one is real estate lending. Real estate lending is very asset-centric. Second one is securities lending, so financial instruments. This is very data-driven, very fast-paced, very dynamic. If we combine those principles, we get to the lending model of Myos, which is secured, asset-centric, dynamic, and real-time lending for merchants specifically. Now, at the core of every lending business is the risk model, and that's where we innovate the most. You all know traditional risk management. You have some private financial data, then you try to somehow avoid or predict the borrower defaults, and then in the end you have a lending model that lives with fixed annuities, so monthly payments. And since you don't really understand the business of your borrower, you would normally require guarantees. What we do different there is we're taking public e-commerce data. So we have a huge data set to start with. Then we take this data and instead of trying to live with the past, we are predicting the future. So we're predicting future revenues, which tell us a lot more about the probability of our merchant, our borrower, paying back the debt. The lending model is super flexible, no annuities. And we don't take any personal or third-party guarantees. We only take product collateral. So you as a merchant don't have any personal risk when taking on a credit. That's just a brief glimpse of our model. I'll be happy to tell you all about it afterwards. But let me tell you, so far, it's really profitable. We earn over 5,000 euros per merchant annually at the moment, and that's a margin of over 50%. Which is pretty unheard of in the lending space. We're growing pretty fast with 40% month over month. We'll reach 1 million monthly revenue run rate by end of this year and 1 million monthly revenue by end of next year. Pretty easy to memorize. All right, last not least, that's the team. We are not your average let's found a company team, but we combine over 30 years in experience among us three. Of course, that's not the whole team. We're some 20 people strong. Right now, they didn't fit all on the slide. And we are going to raise a Series A round, as Apple likes to say, this fall. So happy to tell you all about it afterwards. Thank you very much.